Welcome back. Well, as we wrap up summer 2079, it's good time to perhaps take stock of how the year gone by has been for the Indian economy, because it was marred by a lot of geopolitical events, right from war, rising inflation, crude price volatility, but the Indian economy has managed to fare a lot better than its peers as well. Let's welcome on board none other than Mr. Sanjeev Sanyal, member of the Prime Minister Economic Advisory Council, to talk to us about his assessment of Samvat 2079 and, more importantly, what lies ahead for us in 2080 Samvat as well. Sanjeev, hi, thanks so much for making time and speaking with ET Now, and Diwali wishes from the ET Now family. Your assessment of how Indian economy stands right now, and is there enough reason for the Indian consumer as well as investors to cheer?
So let me begin by saying that the Indian economy is in very good condition right now, particularly given what is happening in the rest of the world. Almost all the high frequency indicators that we have suggest that there is good economic momentum in the system. So for example, the latest numbers on cars and automobile sales suggest that sales are up 16% from last year, and last year they had already recovered from the slump that had happened during COVID. So this is well over and above that. Then you have credit growth growing at something like 19% year on year from the banking system. That's also very strong, perhaps one could argue even too strong. Air traffic is up 18% year on year. GST collections are up 13%. And so generally speaking, the point I'm making is that there is very good momentum in the economy. We have been saying that we are going to grow somewhere in the 6.5% to 7% range in this financial year. That we are well on route to hit a number somewhere in that range, 6.5% to 7%. And let me say that that number would, by some margin, make us the fastest growing major economy in the world. It's not just our view, that's something other institutions have also said, including the IMF, the World Bank, and so on. So, yeah, I mean, given the extremely uncertain circumstances in the rest of the world, I would say that this growth momentum is a very good one. And moreover, importantly, this is being done under circumstances where the macroeconomic indicators, that's the balance indicator.
No, Mr. Sanyal, that point is taken. We are one of the fastest growing economy, but the big question is, how long can we decouple ourselves from what's happening across the globe? Do you think there could be a bit of lag impact, and the slowdown that we are seeing across the globe might have an impact on the Indian economy at some time?
So, as things stand, as you said, as you yourself pointed out, we do live in a very uncertain situation. There are two major wars going on, one in Ukraine and one in Israel. There are, of course, a lot of economic disruptions that had already existed from before, not the least the sort of lagged impact of what happened in many of these countries during COVID, including ramping up of indebtedness, particularly of the governments in the West, but also of emerging markets. So given that the world economy is certainly in some stress, I would argue that the Indian economy right now is basically being driven by domestic factors. Our external accounts, as I said, are in good shape from a balance perspective. The trade balance is in control. But in terms of providing growth opportunities, clearly they are limited because large economies like Germany, for example, are in recession. Even though our services exports are about flat, maybe growing a little bit. Our merchandise exports are a little bit down. Overall, you would say exports are basically flat. So this is not something that's generating forward momentum. Nonetheless, we recognize that the world economy goes through cycles. So we continue to build upon some of our internal inherent strengths. We continue to invest in infrastructure. We continue to push for certain key strategic sectors where we think we have a strong position in the future, and build up strength there, for example, in pharmaceuticals and in certain areas of manufacturing. We continue to attract companies from China that want to relocate, and there are many companies that have already done so or are in the process of moving manufacturing capacities to India. So all of those remain true.
Sure, since you're talking about that the Indian economy is a lot driven by domestic factors, let's talk just about that. One of the red flags or concerns that people have flagged out is the unemployment rate in India, and it's been said that unemployment is now almost hitting double-digit mark. What's your reply to all of those naysayers?
So there are many small steps that are taken all the time, from whether it's required from skilling, filling up government posts, and obviously encouraging different sectors through PLI and other schemes. But in the end, do remember the single most important thing for generating jobs is economic growth. This idea that there is such a thing as jobless growth is completely mistaken. There is no such thing. If you have growth, you will generate jobs. And so therefore, the fact of the matter is we are maintaining good growth rates, 6.5 to 7% right now under difficult international circumstances. If those circumstances change, we will generate even higher growth. I think this economy under good international conditions can easily generate over 8% GDP growth rate. Whatever it is, the fact is we need to keep compounding this. This is about compound growth rate. And that compounding process is what generates jobs. So the single most important thing you need for jobs is keep maintaining growth momentum and keep compounding it.
Sure, I appreciate that you're talking about the compounding effect, but one thing which is actually decompounding is the household savings, right? The net household savings are at a 5-decade low as per some reports. What's your reply to that? Are you or the government concerned about how household savings are shaping up?
I think this is that number is being misrepresented. What it said is that the proportion of household financial savings has gone down relative to households' savings and investment in physical assets like housing. Now, that is not so surprising. If you bring down interest rates, as had happened in recent years, households will take loans and improve their houses, make it pakka, whatever. We also have PM-EAC Yojana, the other schemes which encourage this behavior. So it is not that household savings and investment behavior has gone down. Their investments in financial assets went down because interest rates went down. Now, as you will see, interest rates in the last 1 year or so have gone up. So the entire process will reverse. There's nothing very magical about this. The question is overall savings and investment in the economy going down? No, they're going up.
Fair point. Let me now put the spotlight on the latest measure by the government, which is to extend the free ration scheme. And a lot of people are calling it populist because this might put pressure on the government's fiscal position as well. Your reply to that, is this something that we should be worried about? How's the government looking at balancing the two now?
So we had made certain changes in it in order to restrain that, but we have decided that we shall maintain these free food grain as a safety net to the population, even as we rapidly pull people out of poverty. And every indicator of multi-indicator poverty has come down in the last decade or so, and there are many studies of this. International studies have done this. Niti Aayog has done a study of it. There is no question that poverty is declining, but we need to maintain this safety net so that as we go through rapid transitions, nobody falls through. And so that is part of our safety net approach. And meanwhile, we will keep doing targeted schemes. We have already done so many over the last decade, whether it's toilets or Ayushman Bharat or providing cooking gas. All kinds of targeted schemes are continuously put together to make sure that the people at the absolute bottom keep getting pushed up.
Sure. Let's also talk about a few international factors. Crude, of course, has been fairly volatile, and the Indian government has managed to kind of wade through the volatility in a very strong way in the year gone by. But does this make us a lot more vulnerable in terms of how the prices are going to be going forward?
So we are doing energy transition, but that is a very long-term thing. I mean, in the long run, we will move more and more into renewables. There's a huge experiment that's happening, as you know, with green hydrogen. Many of our largest companies are investing into it. You also have, a new effort in nuclear. We have seen a nuclear plant recently being commissioned as well. So there is a large amount of effort into finding non-oil sources of energy. But that is a long-term transition, and we are putting in a big effort into it.
About food commodities as well, whether it's wheat or rice, we have seen an increase in the prices in the last 15 months as well. What do you think will be the impact of all of that on the economy?
You mean it restrains inflation downwards? Well, to some extent it does, in the sense, to the extent that it puts a cap on spiraling food prices. But do remember that we are also, as a society, becoming richer, and therefore two things you've got to remember. One is food is becoming smaller part of the overall basket, and two, even within food, this is really support for food grains and calorific consumption. Whereas as people become wealthier, they tend to eat other things, whether it is eggs, fish, dal, vegetables, whatever it is. So as this mix also changes, this means that food grain prices is a small part of overall inflation. So even if providing this free is put some restraint on spiraling of whatever rice or wheat or whatever prices, this is not really to be seen as a inflation control mechanism, because the mix is changing of the actual basket. It is more to be seen as a safety net measure, which is a different thing altogether. So the average person may not, it may not matter very much to them, but to the poor it will matter a lot.
And just before I let you go, I want to kind of lean into your insights, because you have, of course, been a great follower and reader of Indian history as well. Give me some sage advice here and pearls of wisdom in terms of how you can put the ancient Indian wisdom into the current context.
Well, India has a very long history, so this is hardly the place to summarize in ancient Indian wisdom, but there is a huge amount of writing on economic and governance related issues in the Indian tradition. Everybody knows about Kautilya, although very few people read the Arthashastra, but at least people know about Kautilya. But there are many other thinkers. So there were thinkers, for example, like Shukracharya, who argued for a legalist approach to governance. There are people like Brihaspati, who accepted legalism but also made a case for policy. Then there is people like Kautilya, who made a case for a strong but limited state, where he argued for that the state should take on certain responsibilities: internal security, provision of infrastructure, defense, intelligence, money, regulation of markets, and should take it seriously. But at the same time, he was very suspicious of government servants and civil servants, and he always keeps talking about restricting them in various ways. So, so there were thinkers like him. Then there were thinkers afterwards, all the way through to the 19th and 20th centuries. There were great Indian thinkers who took on aspects of governance. This is not a place to summarize it, but let me say that we do have a very long tradition of thinking about issues relating to governance, with very sophisticated debates that have happened throughout over thousands of years.
Okay, Mr. Sanyal, on that note, we'll let you go. Thank you so much for making time and speaking with us, and Diwali wishes from the entire ETNR family to you. But with that, completely out of time on this edition of the show. Thank you